Good morning and a very, very warm welcome to our webinar today, where we'll be talking about the future of advice. For this webinar, I'll be exploring with Rhian Singh, what could the future of advice possibly look like? I'm Georgina Smith, and it's my privilege to look after the innate distribution and client servicing team. And it's great to see so many of our advisors online today. Thanks for joining us. This session qualifies for one CPD point. A quick note on CPD. For those of you who watch today's webinar in full, you will receive a CPD certificate automatically via email. For anyone who didn't join us at the start of today or has to drop off early, or if you're watching a recording, you'll need to complete a questionnaire to receive your CPD point. And this questionnaire will follow shortly after today's webinar. As well as the engaging chat between Rhian and me, there's also the full white paper available, which forms the basis for our conversation, and we'll be sharing that with you after the session today. As always, we're happy to take questions via the Q&A. Please do send them in, and it's at the bottom of your screen. Just click on the link there, and we'll answer them at the end of the session. So, without further ado, I'd like to introduce you to Rhian Singh. Rhian is a partner at PricewaterhouseCoopers and specialises in digital transformation. He has a long history within the financial services industry, having trained originally as an actuary. We won't hold that against him. Then working in our industry for a variety of product providers across several countries and mostly in the digital transformation field. He's been described as a quintessential thinker, lodestar, gentleman, and scholar. He and his team have been deep diving into what the landscape could look like for financial advisors and clients. And thank goodness it's not all about COVID. So, Rhian, there are lots of people out there who profess to have crystal balls as to what the future of advice will look like. And the answers are becoming, I think, increasingly diverse the more digital we get. Rhian, what qualifies you to be able to speak with authority on the advice landscape and what it will look like in the future?
Hi, Georgina. Thanks for the warm welcome. Delighted to be here. You must have definitely talked to my mother in terms of getting some of those references. But yeah, I think it's a great question. There's a lot of different views and perspectives around what is the future of advice, and just in terms of why should anybody listen to our perspective? I think there's sort of three main points from where we're coming from. I think first of all, as PwC, we're quite involved across the industry, speaking to a number of the banks, insurance companies, savings providers, understanding their digital and customer strategies. And so we've got a good view across the industry of where providers are focusing, what the challenges are, what the roadblocks are, what people are thinking about. I think the second thing, as you mentioned, prior to joining PwC, I spent quite a lot of time in industry, about 6 years in total as the head of digital or customer experience at different insurance companies. And as part of that role, we would spend a lot of time wireframing, prototyping, and testing different concepts and experiences and products with end clients, with intermediaries, with brokers, etc. And over the 6 years, we must have gone through a couple of hundred interviews and user tests. And so there were a lot of really key insights that came out of all of those tests and conversations and deep interviews. And that's formed a lot of basis for the white paper that we've written. And I've gotten together with some other PwC colleagues who've equally had a lot of experience where they've shared their learnings. And then as far as the crystal ball goes, I think we're very clear that it's a very fast moving environment. There's a lot of things at play. And it's very difficult to predict exactly how the world's going to turn out. But what we've tried to do is describe what we believe are some of the 8 forces that are at play, that are affecting change. And I'm trying to highlight for each of these 8 forces what prospective people need to think about in trying to reimagine what the future looks like.
Okay, so before we get into unpacking those forces, tell us about the position paper you've written and what prompted it and why is it so important?
Thanks, Georgina. I think financial well-being or financial health is a massively important topic in South Africa at the moment. I think as we're all aware, there's a relative financial well-being crisis on in South Africa at the moment. There's lots of stats, even pre-COVID, around the poor financial health most South Africans were in. The fact that only nine out of 10 South Africans wouldn't be able to maintain their standard of living in retirement, and especially with the impact of COVID, et cetera, and what we've seen in terms of the negative impacts in terms of earnings and how many years it's going to take us to actually get to pre-2020 levels. Helping individuals improve their financial outcomes, I think, is a massively important driver in terms of overall well-being for the country. And I think what we've seen is that across all LSMs and income groups and ages, South Africans are asking for more financial help than they currently get. And we've seen cases where there's certain segments of the market that are quite well served. And there's also cases where people do get advice, but it's often a case of too little, too late. In our interviews, we often came across a number of people who would only for the first time speak to an advisor a few months before retirement. And then there was a case of, there was very little that could be done to dramatically improve their outcomes. I think the last point to cover around why we think it's important is that there's different definitions of advice. In terms of how the industry defines it versus how a human being or people in the street define it. I think what we've seen as the way the industry is defined it and the way that FACE is regulated, it's a very strictly defined process with some stuff that has to be documented, a process that needs to be followed, a specific set of recommendations that then comes out around products that need to be required. But when you speak to South Africans around, what do they consider to be financial advice, they start talking about a whole bunch of other stuff, such as, getting simple, plain English explanations of just describing a product, asking to speak to people that have bought the product before and can relay some of those experiences that they have, and just giving them visualization. So they see this all as advice and help to making that decision. And so I think whilst FACE has been intention to try and make advice more equitable, we've often as an industry cut off some of those other parts of it, of help and assistance that individuals are asking for.
Yeah, I couldn't agree more, actually. And plain English, we're certainly seeing a trend towards a lot more plain English, plain language, something I feel very passionate about. But so, Rhian, so what are the key headlines that have come out of your research?
I think one of the key headlines that have come out, and certainly a message that we've given to most of the companies that we've talked to, is that as we look across the roadmaps and plans for many of the financial services providers, many of the things that they're working on in their advice journey would be very similar to what answers they would have given us 5 years ago. So when we speak to companies, they say they're trying to improve single view of customer, they're trying to digitize processes, they're trying to take paper out of the system, then trying to improve practice management for intermediaries. And I think that's all great, and those are hygiene factors. But like I said, you would have got very similar answers 5 years ago. And so almost by definition, a lot of the focus is still building the business of today. And we believe with some of the forces that we're seeing now, providers and intermediaries need to start thinking about what does the business of tomorrow look like. And we're already seeing pockets, both locally and internationally, of some of that emerging thinking around what does the future look like. And we believe, I think as a headline takeaway, more thought space needs to be given to what that business of tomorrow looks like.
So you mentioned that there are 8 key forces that you found and you sort of explored in your paper, and they have varying significance to different players in the value chain. Perhaps you can just give us a short tour of the 8.
Sure. So I think the first of the 8 forces is around fulfilling the demand for holistic advice, and effectively what this speaks to is around the need to be more advice-led rather than coming from a product push perspective. And it's something we've heard very strongly from the consumers that we've interviewed. The second theme is about being more authentically purpose-driven. And this really comes down to understanding, what does financial wellness or financial well-being look like, and how do you actually show that you're helping people improve their financial outcomes? The third is around engaging in channels of choice. So not trying to build new channels to engage with your customers, rather engage with South Africans in the channels that they're already in and already comfortable with. The fourth is around enabling non-linear purchase decisions. And effectively what we're talking about there is that no longer do we see the intermediary as the sole decision point in helping an individual make a financial decision. They're looking to other sources of trusted information, and it's about how do insurance companies and intermediaries bring together all of these trusted networks and sources of information to help guide and nudge individuals in terms of making some decisions. The fifth one is about embracing hybrid advice models. And so this is really about not trying to go to robo-advice or sticking as pure human advisors, but we really see the future to be a combination of both. The sixth was helping customers connect to their future selves. And so we see, I think, a lot of evidence from a behavioral economics perspective where individuals are able to make much better financial decisions when they can visualize in very tangible terms the impact of making certain decisions. We've also seen the need to scale up hyper-personalization. Expectations have increased from a consumer perspective. And so they're now expecting the same level of personalization when they speak to their insurance and savings companies as they do when they engage with the Amazons and Googles and Apples of the world. And then the last one is really around experimenting with remuneration models. As we see with RDR and TCF, there's a profound legislative impact. And there's still more stuff that's still to come from RDR, but it seems quite likely that quite a few products are going to move from a commission basis to a fee and activity basis. And so we believe providers need to start thinking about what could that look like and start testing out different models.
So given our time constraints today, we're actually going to focus on 4 of these forces that you will believe will play a significant part for our advisors watching today. What are the ones we're going to explore today, Rhian?
I think the 4 that are the most prevalent and most important to bear in mind for intermediaries themselves, I think it's around really understanding the need for holistic advice, trying to show how you're authentically purpose-driven. I think embracing some of these hybrid advice models is going to be really important, as well as helping your end client, really connect to their future selves. I think of the 8, those would be the 4 specifically that intermediaries can wrap their head around and try to think about how to fix them.
Okay, so let's get stuck into the first of those, holistic advice. Now, holistic advice means so many different things to different people, from, for example, advising a whole family across generations to, say, an advisor broadening the product range they feel comfortable advising on. Let's unpack what holistic advice means to you, Rhian, and to the future of advice.
Yeah, I think you raised some good points there in terms of how you intro the question, Georgina. I think when we speak to a lot of consumers and interview them after they've had an advice conversation, very often the sentiment gets voiced that the industry or the advisors have engaged them from a product push perspective and haven't completely heard them from a holistic perspective. And I think there's reasons for that. I think, like you mentioned now, typically we don't see that you have one advisor that's fluent or comfortable in the full product set. Normally advisors that when we've done interviews are quite comfortable with certain products and we prefer sticking to the conversations around those. And then also we know from a incentive and commission structure perspective, certain advice products are incentivized. And I think what we're seeing clients are saying to us is that they often are expressing needs in conversations which they felt are not being heard. I think that one of the best examples I have, we once did a mystery shop where we sat in on a particular advice conversation, and the individual was about 5 years away from retirement, and I think he raised 3 or 4 times in the conversation to say, listen, I've got all of these shares through MTN that I've accumulated over the years. What do I do with these? And the advisor was very focused on their life insurance in terms, and also on their retirement savings in terms of putting stuff into a preservation fund and then starting to pick out the retirement annuity, but never addressed the question around what they should do with these MTN shares. And then, we witnessed that firsthand. And then after the conversation, when we did a debrief with the client, they said, listen, they felt helped in that one aspect, but they still had this big question mark over their heads, and they weren't sure what to do with it. And so I think, in terms of what comes next, it's really getting to look at scale and more often at all of the things an individual is asking for, and reviewing all of their financial products and assets, some of their non-traditional assets, and helping them make some of those decisions. And we see, the questions that individuals are often asking us as well, which is, should I buy versus rent a home? When it comes to getting to work, should I be buying a car, or should I actually be just taking an Uber because it makes more financial sense, etc. And then the last thing I think, which has also been really interesting, is a lot of people have talked about the divisions we place between financial health and physical health. So almost as an industry, we're very much geared to have separate conversations with you around how financially well you are versus how physically well. But often, especially with older customers, what their voice is, they see the two as being interconnected. I've often seen comments around, or heard comments rather, about what's the use of being financially well if I don't have my health, and I'm not able to enjoy it in retirement, etc. And as we've seen, one of the biggest drivers of bankruptcy in retirement is rising and escalating medical costs.
Yeah, and I think you've really broadened the spectrum for me on what holistic advice really means. Can you perhaps give an example of people who are getting this right, Rhian?
Sure. I think there's examples, like I said, there's pockets of excellence that we've seen both internationally and locally. So in Canada, there's a startup called Planswell, which looks quite holistically at all of its clients and provides a freemium service. They do things like child affordability calculators to help provide people with an accurate view of what the cost of the child is going to be over their lifetime, and what are the needs that need to then plug into that, and how that impacts kind of their investments, their mortgage, their insurance. And then locally, there's another startup called LifeCheck, which helps individuals create sort of detailed, personalized plans. And they really come from the top level, which is they talk to you about career planning, career strategy. Should you take that job offer? What is it going to mean to you from a long-term perspective around moving from this job where you may be getting an annual bonus to this job where you're going to be getting share incentives? What does that mean from a wealth building perspective? What does it mean to start a family? What does it mean to build intergenerational wealth? And they start at that level, and then right at the end of the conversation, then get into particular product recommendations around, what some of those underlying solutions might be.
Well, I can tell you right now, having kids is really expensive. So think carefully before that one. But what does this mean for advisors watching us today, Rhian? What should they be thinking and exploring and pondering as they move forward?
I think the big takeaway for advisors is to recognize that they can't do it all, and be comfortable with that, and see themselves to become the orchestrator in these kind of ecosystems. And so almost focus on, if a client expresses 6 needs in a conversation and you're comfortable fulfilling 3, rather than just focusing on the 3, then building up those networks and partnerships to actually fulfill some of those other needs that consumers are voicing, and almost see yourself as the facilitator that can bring in other areas of expertise, because what we've seen is that'll actually build up trust. And there's cases where certainly there might be some short-term sort of revenue loss, because for many clients, what we've seen, the best thing to do from a financial wellness perspective is just to bring in a debt counselor, which might mean less of a sale in the short term. But once we've spoken to those clients that have gone through debt counseling, and they talk about the life-changing impact that saving 1,000 to 2,000 rand a month on these debt payments makes to them, they then plow that money back into other insurance products to sort of go higher up the scale. So, like I said, I think the big takeaway for advisors is to be more cognizant around all the needs that are being voiced, and think about how you can facilitate some of those other conversations, even though it's not directly in your wheelhouse.
Okay, thanks. That's a great insight into that first theme or force Now, the next force that I'd like us to look at is becoming more authentically purpose-driven. I'll try saying that after a few whiskies. Now, when I say becoming more authentically purpose-driven, I think advisors watching today may automatically jump to the ESG and responsible investing kind of part of the conversation. Is that what you're talking about here, Rhian?
Yes, I mean, and that's definitely part of it. But I think it goes a bit wider than that. So I think one thing that's become very clear in the pandemic is that there's been this collective realization amongst most people that we're all in it together. And we've seen very clear evidence across all industries that the companies and the brands that have been able to clearly articulate, what their societal purpose is, but then also demonstrate how they're helping to meet that purpose, like actually show the progress around what they've done tangibly to impact that progress. We've seen in the last 18 months, those have been the brands and companies that customers have rewarded the most, because there has been this very strong connection around, we have to do more and help each other together. So I think, and the challenge in South Africa, when you look at all the big financial services providers, everyone talks about, and everyone has their own definition around, they call it either financial well-being, financial wellness, financial health, etc. And it's all, to some extent, I can say this because I worked for some of these companies. It's a little bit nebulous in terms of what that definition actually means. It's almost a little bit vague. And the challenge then is to take it down to the next level, to say, these are the metrics and these are the things that we actually want to do for you. And we can actually show how we've improved our clients' lives. I think those are going to be the key challenges in terms of how to connect with customers more.
So you speak about metrics. Let's make this practical. What sort of metrics might an advisor use, and how might they track them?
Sure. I think there's a couple of different metrics, and it depends on the financial needs that you want to focus on. So I think one of the metrics that we've often talked about, it's around net replacement ratio, and I mean the key thing here is that very few of the clients that we've spoken to, even very highly educated and white collar with high incomes, etc., really understand the term NRR. But once you explain the concept behind it to them around what it stands for, I think that concept resonates. So I think NRR as a concept works well, but it's incumbent on the industry and providers to really explain in much simpler, like we said, plain English, and to really bring it to life, what your retirement outcome is, how you're tracking against it. And then also, like I said, then demonstrate based on the decisions we've made in terms of, which portfolios we put you in, the fees that you're being charged, the level of savings that we've put in, how we've structured certain tax, etc. How has that outcome kind of been improved? I think there's definitely some metrics around debt that you can look at, and not all debt is bad debt. You definitely have good debt which allows you to grow, but then equally there are levels of bad debt. So you can definitely put some ideas in place around what is the optimum and healthy level of debt for individuals. And then I think also from an insurance perspective, I mean, especially when we get into disability, I mean, often it's quite funny when you speak to clients around asking them to explain what do they have in place and what are they covered from a disability basis or a critical illness perspective. Customers actually quite find it quite hard to verbalize what they're covered for and what they're not covered for. So I think in terms of trying to make that easier for clients to understand and to decipher what it is that they're covered for and what the metric is behind that and how you've improved that metric, I think that's really important.
When we chatted beforehand, we mentioned about some interesting metrics and actually companies that are coming to the party. And I know Scandinavia, some of those countries have actually really started to take this very seriously about how they can help consumers really use those metrics to become a lot more informed. Perhaps you can talk a bit more about that, Rhian.
Sure. Like I said, I think there's a couple of few financial services companies that are taking this to heart and are seeing some positive traction. So the example in Sweden that you mentioned, there's a company, a Swedish fintech called Economy, and they've launched a new credit card called Do Black. And what's unique about this credit card is that every time you swipe the card, it calculates the carbon impact of that swipe or that purchase rather. So the carbon impact of that coffee, of that Uber, of that cinema trip, etc. And then what it does is it cuts you off at the end of the month if you've exceeded your personal carbon limit for the month. And so it definitely is connecting quite strongly with that mostly younger segment of the population where environmental concerns are quite important to them, and they want to be able to do their part in terms of living within their monthly limit and making choices to both marry their financial well-being and some of their larger concerns. And I think you mentioned ESG previously. I think we're also seeing companies like a lot of investment managers who have made decisions to say, we're only now going to invest in ESG compliant portfolios, etc. I think it's probably 1 or 2 years ago now, but BlackRock globally was probably the biggest and most famous example of that, where they've said all of their portfolios will now embrace green energy. They've actively disinvested out of anything around fossil fuels or coal, etc. And they've made those very clear statements and guiding positions, which they believe is not only good for the environment, but they actually feel they'll be able to earn superior returns within in the long term. So I think there's lots of examples where companies are talking about what that authentic purpose, and the word authentic is important here. It's not just kind of coming out with generic stuff. It's, we're seeing the brands that are doing well are really defining that in terms of what does it mean for us? What is the specific piece that we want to focus in? And now we can show you that not just through words, but how we're actually progressing those goals.
So it's really aligning my purpose as a client with the products and services and suppliers who will have a similar view and a similar purpose. And that may or may not have an ESG element in it, but certainly in my conversations that I've had with advisors, we're definitely seeing these conversations becoming more and more prevalent. Okay, so before I move on to our third theme, I'd like to remind those of you who may not have joined us at the beginning of today's webinar that there is one CPD point available for today's session. And for those of you who watch today's webinar in full, you'll receive a CPD certificate automatically via email. For anyone who didn't join us at the start of today or has to drop off early, or you're watching the recording, you will need to complete a set of questions to receive your CPD point. And these will follow shortly after today's webinar via email. Rhian and I today are discussing Rhian's position paper on the future of advice, and this will be available via email after the webinar today, so look out for that in your inbox. It's well worth the read. I hope you're enjoying our discussion today. Keep those questions coming. They are coming thick and fast, my goodness. I'm desperately trying to keep up here. I'm looking forward to getting onto those Q&As a bit later on. So, Rhian, we have talked through two of the key themes in your position paper, holistic advice and becoming more authentically purpose-driven. Let's move on to talk about our third force, embracing hybrid models. Now, I'm guessing that for a lot of people watching here today, when they hear the phrase embracing hybrid models, they may well think they need to suddenly implement a robo-advice solution. What would you say to that?
Yeah, I mean, I think actually for the last 3 or 4 years, this has been a very big discussion point in the industry around, do you go robo-advisor or digital or direct, or do you go human / face-to-face, or these virtual in these times advisor? And I think for us, the big takeaway is that it's a false choice between having to choose. I think what we're seeing is the winning model going forward is a combination of digital / robo advisors complemented by a human advisor. And taking it back to some of the challenges that I mentioned right at the beginning, when we got involved, and a lot of the interviews we did looking at intermediaries, how they went about their day-to-day jobs, there's a lot of time that intermediaries and their support staff actually spend work, on the grunt work, in terms of huge amounts of time spent capturing personal information, making sure that it's all complete, generating these advice records, providing those first level round of recommendations or articulating the options, actually explaining basic financial concepts. And like I said before, there's a need in South Africa to provide more financial advice to a greater section of the population. And it's not going to be possible to to triple or quadruple the number of financial advisors that we have in the country. And I think the goal is to say, how can we make, each advisor on average, see 5 or 6 times more clients? And so what that means is, what that implies is that, we need to make advisors much more productive. And that's about effectively taking away all the admin and really being able to scale advisors against a larger section of the population and really focus on the high value add activities and services. And so what we're seeing here as the winning model is where providers are engaging with their customers, and they're using digital/robo solutions that are able to collect all of that financial and personal information about the customer, really build up quite a rich view of what that customer looks like and what all their product holdings are. It's then able through different gamified experiences to help people understand the different concepts. What is a living annuity? What is a guaranteed annuity? What does what do some of these terms mean, etc. And then provides the first level of recommendations where people, and almost scenario analysis where this is what would happen to you under different scenarios. And then you're able to then share that picture with an advisor, and an advisor can then come in and really, like I say, provide a higher value add service, which is helping people think through the options and some of the discussion points. And it's almost changing the role of the advisor a little bit, I think, from someone who spends a lot of time on, like I said, grunt work and explaining basic concepts, to actually becoming more of a, I'm not sure if the right word is psychiatrist, but an emotional coach, where you're helping people talk out loud. I think probably one of the most amazing insights we got out of all the customer research that we did was that often people would go through these processes and say, listen, I understand what you're telling me. I just need to talk out loud to another human being to kind of soundboard stuff and to just check what I'm thinking. And so being able to build up that picture, get those first level recommendations, share it with someone, and then hopefully in the future sit side by side, or at least Zoom calls for now, and talk through it and have a human conversation around that. I think that's what we see as kind of the future going forward.
So when I listen to you, I'm hearing about systematizing advice, and that may or may not be with robo-advice type solutions. But I'm also hearing you talk a lot about business efficiencies within the advisor's office. Now, I'm not supposed to punt Innate on these conversations, but I cannot resist, I'm sorry. This is absolutely where Innate plays in bringing tangible efficiencies through our digital platform into the advisor's office, and using plain English to do it as well for their clients. And having been a business owner myself, anything that makes life easier for a business owner is something that I feel incredibly passionate about. But perhaps, can you give us some other examples as well, Rhian?
Yeah, I think the key lesson for us and what we've seen is we always believe that there's going to be the role, and a significant role, for the human advisor. Because I don't believe you're ever going to get away from the perspective where you're going to be able to divorce that human input, because these are like really big decisions that people are grappling with, and it's like an intrinsic human need that they want to talk to someone, just to get someone else's perspective to help them make that decision. And what we've seen definitely abroad is that many of the big players have acknowledged that. So we've seen the cases where the large traditional brokerages have acquired some of the smaller fintechs, the robo-advisors, and are using the human advisors in tandem with the robo-advisors. And then what we've also seen is some of those fintechs, which start off at robo-advisors, have then started building their own human sales forces, who are then able to also provide advice. And there's a number of different variations around how the business model works, where often there's a sort of freemium model where the robo is providing the basic level of help and assistance, and then on the higher levels of service that you're seeing actual human beings getting involved. But everything we're seeing from a trend perspective is pointing out to in future advisors becoming these sort of, if you will, bionic men and women that are going to be working with the technology to be far more productive and to see and to be able to service a wider set of individuals.
Wow, more bionic than our advisors are already. That's a future to look forward to, perhaps. Thank you, Rhian. So, what I'm hearing is advisors who systematize and drive business efficiencies within their business where it's appropriate are the ones who are really going to thrive. Okay, so taking a deep dive into those first three forces, the last theme or the force that I want to talk through is helping clients connect to their future selves. Gosh, I'm not sure I really want to see myself when I'm 80. Is that what this means?
I mean, definitely is to some extent. I mean, I think what we've seen as an industry is that often individuals don't really understand the path that they're on. I mean, they kind of get it intellectually, but and again, you definitely see this at the moment of retirement, where individuals, by and large, are actually quite shocked at that, leading up to retirement, about the path that they're on and the levels of income that they're going to be able to replace. And I think, as an industry, the way we communicate with clients typically, it doesn't lend them to really visualizing the impact on their future. So we talk to them about NRR, and like I said, it's a good concept, but explained poorly. And no one really understands that percentage as it's presented. We often talk to individuals about the current level of their savings levels or the projected savings levels. So you've got 2 million Rand saved up, or you're going to retire with 6 million Rand. And the comment, when we've interviewed individuals, is they see the big telephone number and they get lulled into a false sense of security. 6 million Rand, wow, that's more money than I've ever seen in my entire life at one point. I'm sure I'll be fine. But no one's actually saying to them, well, actually, you probably need 12 million to maintain your standard of living in retirement. And there's lots of behavioral economics research that we've seen where, at the moment of making a decision, if you can get people to understand in simple language or in visual terms the impact of making that decision and how it's really going to impact them, people make much, much better financial decisions. I think often where the industry falls down a little bit is we run these financial education programs, and as much as there's good intent in it, what we've often seen with these financial education programs is it goes in one year and most of it goes out the other year. And then at a different moment in time, when we're asking people to make the decision, they're making it in a vacuum and they don't really understand the impacts of that decision. And if you educate at the moment of making the decision to make it very, very visual and very real to individuals, then we've seen cases where people then sit up and actually understand it and are willing to make the short-term sacrifices that they're often reluctant to. And as a side joke, I mean, what we've seen with a lot of the digital solutions that we looked at building is actually presenting face-aged pictures back to people actually helps. So as much as you don't like the thought of seeing yourself at 60 or 70, what we've seen is when that happens, it almost strikes a chord with a lot of people, because people often think, retirement, it's so far away. I've got 30 years to solve for it. I'm sure I'll be fine. I'll start saving in 10 years' time. But it's interesting when you've done experiments where people see face-aged pictures of themselves, it strikes something to say, getting old is actually a thing. This is actually happening. I really need to do something about it. And it almost strikes people at an emotional level, and it prompts action. So you might see different variants of that in the future.
Wow. Yeah, I'm not sure how I feel about that. I mean, you talk about the face aging apps. Are there any other tech ideas out there in terms of sort of painting this picture, helping people connect to their future selves? Or is it really just as simple as getting better with painting with words?
I would say it's an and. So the more stuff that can be done, the better. I don't think there's one single bullet that kind of solves the needs from everybody. Because again, I think what we've seen is that different clients resonate with different things. So definitely words help. One of my favorite things to do when we look at customer strategies and insurance is to take all of the existing brochures and product forms and benefit statements and look at the readability level on those forms. And it's an exercise that anyone can actually do. If you Google it, there's a lot of free readability tools on the web where you can paste in a portion of text and it'll tell you the reading level of that text. And by and large, I mean, there's obviously exceptions, but by and large, the industry communicates at roughly a second year university level. So you kind of have to have a BCom or a BSc, or be pretty close to graduating. And even then, it's normally like 6 or 7 pages and size 10 font, right? So it's a lot of reading to get through. And really, what we've seen, what you need to aim for, is sort of a standard 8, grade 10 reading level in terms of helping people connect. So I think a lot can be done just in terms of the words already around simplifying and speaking in plain English, and then really trying to describe the outcome rather than, I spend a lot of time rewriting benefit statements, because I think often it's written by actuaries. And I think there's always this focus on being technically correct on what the outcome is. And you actually need to take a step back and rather come at it from, at a high level, what is the outcome? What is the customer getting? Which actually takes some time to rewrite it into plain and simple English. And then I think what we've also seen is there's a lot of gamified experiences that companies are working on, where people are able to build up a picture of what their life looks like, and then they can fast forward at different moments in time, and then they can simulate different shocks or external shocks. So, what would happen at 40 if you were disabled, or what happens if you pass away or someone else passes away, or what will it look like in retirement when you're 70 years old. And what people don't actually understand is that medical inflation post-retirement is actually much higher than normal inflation. So how's that going to impact, etc. So I think we'll see much more scenario and these sort of gamified tools that'll help people visualize, what are some of their different futures outcomes look like, and then take it back to, okay, so what are the decisions or trade-offs I can make now to improve those scenarios?
So what should advisors be doing differently, do you think, Rhian?
For this particular theme?
Yeah.
I think a lot of it, advisors are doing a lot of the base and building blocks already, from what I'm seeing, in terms of, building up these pictures of what their clients look like, the current life looks like. I think the key bit, and we've definitely seen some advisors do this, but like I said, there's definitely pockets of excellence, but I think to a much larger extent, it needs to be placing, really helping people understand, what does it practically mean when they get to retirement? What are the actual decisions that they're gonna have to make? For example, I talked about the medical inflation one. That's an insight that comes out quite often from people that are 5, 10, 15 years post-retirement, that they didn't understand, the extent to which medical costs would increase. One of the big things that we're seeing now at the moment as well is that, with longevity increasing so much, we've people that are retiring now, you've got a pretty good chance of living to 100. And so it's the old retirement advice of, being able to save 15% of your salary for 40 years. That's not going to then be able to sustain another 40, 50 years post-retirement income. Compound interest is great, but it's not that great. And so often what we're seeing now is the conversations around people need to be able to earn an income post normal retirement age, 60, 62, etc. And so we're seeing pockets where individuals are being talked around, what skills can you start picking up now that can help you build an income post-retirement? Can you do micro and nano degrees on Udemy, etc.? Can you do, lend your time to, if you're a retired CFO, etc., to provide, coaching and mentoring support to other startups, etc.? Can you start a side business? And what are the skills that you need to start a side business now? Because again, one of the biggest insights we've got into is that people will get to retirement, realize that they don't have enough, and then at the moment of retirement, try to start a business. But most of these people have been salaried their entire lives and have never built up those entrepreneurial and sort of skills required to manage their own side hustles. And so quite often those fail. So I think we're seeing much more focus on, again, and this ties back to some of the holistic ideas around trying to actually help people think through the full impact of their decisions, really painting out in a rich view what everything they need to consider is, and what's those other things that they need to do. Like I said, beyond just the financial products, that people need to think about in terms of improving their overall financial outcomes.
So you really are seeing that financial advisor, as you rightly said earlier, becoming much more of a life coach, much more of an emotional coach as well, and really helping the client transition effectively from working life to retirement life, where they maintain financial stability, but also emotional and mental stability as well, which is really quite a much broader remit than I think most people would think of a financial advisor. So perhaps just looking at your whole paper, I mean, we've done a whistle-stop tour today of four areas, and there's another 4 areas which are just as interesting, I think, to pore over. But what are the key things that you would like advisors to take away from today?
I think the key thing for me is like I said, no one has an exact crystal ball that can predict exactly the way that these forces are gonna play out. And like we said, there's differently for each one of these themes. There's pockets where intermediaries and companies are starting to do some really interesting things and get traction. And so I think what we always say from a digital strategic perspective is that the winners are going to be the ones who fail the fastest, who try the most, who experiment the most. And so I think the challenge or the takeaway going forward is to try to run as many different experiments going forward as possible. So for a lot of these themes, it can sound overwhelming, and there's a huge amount that kind of unpacks. But as you work through all of them, there's very clearly, I think, for each of the themes, small experiments or ideas that you can run where you can pilot with just a few clients, and the idea being try different things, get the learnings from those, and then take that back in terms of, okay, what can we do to build it out, to scale it wider, and start on this never-ending journey effectively, where you're always going to be experimenting and trying new things. And I think the advisors and the organizations that do that going forward are going to be the ones that have the greatest chance for success in differentiating themselves as customer needs changes and as the technology continues to change at an exponential rate.
I hear what you're saying about experimenting, and I completely agree. Advisors certainly need to experiment with tech and lots of different ideas and ways of doing things. But I think there's also a fear, perhaps out there, if I jump in with this piece of tech, what if I get locked in? How do I extract myself? What if it's not as good as I think it's going to be? What would you say to that, Rhian?
It's definitely a big discussion point that comes up, where, especially around practice management and some of the advice tools, where migrating from one platform to another can be quite clunky. And so you want to make sure that it's the right decision for you before you make some of those big technology decisions. And so I think you should always explore the extent to which you can do a pilot, a proof of concept, and as far as possible, in the same way that clients want to speak to other clients that have bought similar insurance products and can talk through their claims experiences. I think speaking to other advisors and intermediaries or brokerages that have adopted some of the tools and can relay their lessons learned, I think is also really important.
So, Rhian, I think that it's been really, really insightful. Thank you very much. I'm going to jump across to the questions if I may, and there's quite a few for us to work through. I'm sure we won't get through all of them, but let's have a go. One of the things that's come up on a few questions is your opinion on fees. Given we have, we've effectively broadened the spectrum of advice and taken it in a much broader way, becoming a coach. Brandon, I think, says, what is your opinion on fees going forward? What can you charge for, and what do you think you shouldn't charge for? Thanks, Brandon. Thanks for that question.
And that's a really interesting one, because I think as you go with RDR to an activity-based model where you're going to have to break down the different services and be quite explicit around what those services are, we're going to have to see it. And I don't know the answer around how do customers value those services, because do clients see some of these advice services as something that pertains to the same hourly rate as a plumber, as a lawyer, as a dentist? I'm not sure. And maybe there's some services which they see as quite commoditized and, a lower hourly rate, and some of the services are going to be higher hourly rates. I'm not sure. So I think what we've advised with a lot of our clients is, there are pieces of RDR that have come into play already, but the impacts, the full extent to which it's going to impact the commission model is not 100% clear. And so we're definitely advising our clients to pay attention to what the legislative bodies and the regulation bodies are discussing around RDR, and start running those experiments where, not for all of your clients, but for a couple of clients, to try it out to see what is resonating with individuals, what are they willing to pay for. And like I said, there might be portions of the traditional advice journey that you can decompose. There might be services outside of the normal advice journey for which advisors can charge, and there's potentially new revenue streams that they might be able to earn fees on. Again, talking to what we mentioned before around playing a holistic advice role, and linking people into, or linking other service providers into to service some of those wider needs.
Quite interesting, and we do see sort of trends of how people do charge their fees. I saw a report coming out in the UK where people are moving back towards a percentage of AUM as opposed to their, we saw a trend coming of like a fixed pound fee coming through. So interesting how those trends work their way through. Another question here, Craig. Hi, Craig. Lovely to see you online. Thanks so much for joining us today. The issue of transformation is ever present in the South African context. Has your research explored or found any interesting transformation-related issues, be that market readiness or differences or things that need to consider? What would you say to that, Rhian?
I think, there's a couple of different aspects to how you can define transformation. One of the interesting things that we found is, people generally like to see themselves reflected in the advisors that they engage with. And so I think from a racial perspective, I think there's been, over the last couple of years, as newer groups have built wealth, etc., the profile of the advisor force has been able to change to reflect that. I think the one gap that there still is that increasingly we're seeing more financial decisions, or primary financial decisions, being made by younger women. And that's an area, you can say, of the advisor force that isn't as well represented as it could be. You don't see that many young female financial advisors. So I think from a transformation perspective, I think that's something that the industry can definitely focus on, because, like I said, increasingly we're seeing more younger women making these decisions, and they generally, people like to see people like them when they engage with, to soundboard and to discuss and to make some of these decisions.
Yeah, women can talk a lot, can't we? So according to my husband anyway. Wonderful question here from Arifa. Thanks, Arifa. Education is probably one of the biggest things we can do in providing holistic advice. Are there other ways in which the advice gap can be narrowed quicker, Rhian, do you think?
It's an interesting one. I think, education is quite a broad church, because there's a lot of things that can fall under the guise of education. And I think the principle for me behind it is often, I've seen with a lot of insurance companies, they've approached education as almost a tick box exercise. I've spent a lot of time specifically working in the retirement fund industry, and you can tell by some of the examples that I've used, but often when retirement funds are communicating concepts with and benefits with their members and their clients, they say they've done financial education, but when you actually take a read through the material, and first of all, not many people read it. From the amount of people that do read it, there's very little that's actually retained. So I think there's the biggest thing is to try and rotate from just saying that you've done it to really understanding, has it been effective, and showing that it's been effective. I think it's the biggest kind of mindset change, and related to that, it's education at the right time. Like I said before, we often give people financial education. We'll send them some documents, and then a year or 2 years later, we ask them to make a decision. And they've completely forgotten the context or some of the concepts, etc. So I think you need to bundle that financial education at the moment of making the decision. And this is, again, where I come back to that hybrid advice model, because if you, with some of these digital experiences, we can see now at the moment of buying a product or making a claim or servicing or doing an amendment, you can actually explain some of the concepts in a lot of detail. You can run scenarios around what does this actually mean under different shocks, etc. And so I think, just to come back to that, just trying to make it much more outcome driven rather than saying, oh, we've done financial education, because there's a big difference between doing it and doing it well.
There's also a really big difference between learning about something new and blasting your preconceptions. There are certainly a lot of people have preconceptions about how things work, and actually, a lot of the time it's wrong. So there's education and there's realigning misconceptions, which I think are both incredibly important. Question now, actually, it kind of runs on from what you were just talking about, which is about AI. So insurtechs are taking over and revolutionizing the insurance world and allowing products to be priced more efficiently. How much AI is used in financial planning, if at all? And are we in South Africa too slow to adopt AI? What do you think about that, Rhian?
I think definitely from the insurance and banking industry. I mean, we definitely see that the industry has embraced and built advanced analytics, AI, machine learning, and we're not probably that far behind the rest of the world. I mean, well, definitely in pockets at least. I mean, we definitely see especially some of the newer fintech providers. So on the short-term insurance side, players like Naked and Pineapple, which are very much AI and machine learning led, which are actually doing some quite amazing things. I think the key thing around using some of this advanced analytics is number one, really trying to understand everything about a consumer, and then trying to understand the variances of that consumer and how to personalize based on your specific variances. Because one of the biggest challenges we have in South Africa, we are the 9th most diverse population in the world. And you can imagine, we're a crazy mix of a country, right? I actually can't believe that there's 8 countries that are more diverse than us. But what that means, often as an industry, we always talk about what the average South African does. And the key takeaway is that person doesn't exist, or those people do not exist. And it's a great discussion between the mead and the mode, etc. You can't talk about, what these averages look like and what people like you should do. What you need to do, and you can do it without AI, but some of the AI can certainly help, is really understand someone in detail and understand, based on your unique context, what promise we need to give you and how we need to personalize it to you, and get away from the generalizations, which we find don't resonate with anyone. Again, one of the most powerful insights that we got when we asked people to define financial wellness, a lot of South Africans said it was a very personal question. And everyone defines financial wellness in very different ways. Some people said, to me, it's about being able to maintain my income in retirement. For other people said it's about being able to travel twice a year. Other people said, to me, being financially well is about being able to send my kids through college and being able to pay for the university and make sure that they had a better education than I did. That is sort of my sum and end goal around what financial well-being is. And so I think the more that we're able to use both some of our human skills and some of the technology to see people and to recognize the differences and to tailor accordingly, the better.
Yeah, I absolutely agree with you. It's about personalizing wherever you can and using AI to help you do that, isn't it? I'm just going to move to our last question. And this is from an anonymous person who says it's been very insightful. Thank you very much. It might be your mum listening, I'm not sure. How would you think about developing collaborative partners? And this goes back to your point about holistic advice. How would you think about developing collaborative partners, values and fees, etc.? So considering those values and fees across specialized skills skill sets to provide an ecosystem which meets the client's needs. So, for example, an accountant, tax, career guidance counselor, business advisor, legal specialist, all of those sort of things, marriage counselor, that sort of network. How would you go about building that network? And then, then there's that side conversation in there about fees as well. What would you say to that?
I think it all comes down to really understanding the customer journey and understanding what is required to enable that customer journey, and use that as the starting point around who are the people that you need to engage, and then on the base of that, once you've identified that, then what is the right fee structure. And again, I'll mention the example that I briefly covered earlier around retirement. What we saw was that in order to give people, a better retirement income, it wasn't just about their savings product and the right RA, etc. We needed to help them build skills, and so that led us to particular learning platforms that we wanted to provide our customers access to, so that they could learn and do micro degrees. We often saw that short-term debt was a big reason why people would resign from their jobs, so that they could actually get access to their pension funds to pay off that short-term debt. And so we said, all right, so there's clearly a debt management and counseling solution that's required as well. And then as you understand those customer journeys, whether it's a kids' university savings goal, or an overseas trip fund, or whatever that financial goal might be, as you kind of build it out around what is everything required to enable that, you can say, okay, these are all the stakeholders we need, and then get into a decision around what is the commercial structure based on what is economically feasible.
Rhian, thank you so much. I'm going to wrap it up there. Special thank you to you for being in the hot seat today and enlightening us by sharing your crystal ball and allowing us a glimpse of the future. Thanks as well to our audience for joining us today. It's been great to have such a supportive band of advisors with us since we started doing this series last year. We've done so many of these webinars now. You guys really do feel like family. I look forward to seeing you all again shortly. Thanks very much for being part of today, and have a great day. Goodbye.
Cheers.